It is Thursday, April 30th, 2026, and it looks like it was a good day, at least on paper, being up 5%. But honestly, I'm not happy. I'm upset. And it's times like these that are actually the worst time periods, at least for myself. And I'm going to explain why. So, time periods like now where retail stocks, a lot of growth stocks, like I've been talking about, crypto, risk on, software stocks, beaten down hard. But the just basic indices, right, like the ETFs, SPY, QQQ, the Dow, making all time highs, they're going up, or a lot of boring stocks or just asset classes in general that a lot of people overlooked for many years, like a lot of commodities, quote unquote safe stocks, dividend stocks. Time periods like now where those they seem to be outperforming while retail growth heavy stocks are underperforming. Those time periods are probably the most painful, more so than an actual market crash. Because at least with a market crash, you can just buy almost anything, not everything. Because I've definitely bought some stuff, during a market crash that are probably still down or just non-existent anymore because they went bankrupt. But I would say most things, right, during a market crash, like the basic indices, if you just buy any of them, most of the time you will make money, right? Or it depends on the period of time, of course. But honestly, I would take a broad market crash over this like selective time period that we're in right now any day. But anyways, for the past week, I am actually down over 9%. Past month, I am up over 5%. Past 3 months, I'm actually still down 21%. Year to date, still down 32%. Now, something interesting though on the year to date chart. So I did go over this briefly in the past where we had this time period where it's just chopping around, not doing anything. And then we had this brief breakdown that was kind of a fake out because it immediately just wiped everybody out. So if you notice, anybody that bought here, right, would have been losing money here. And then people shorting down here thinking it's going to go down even more. It actually ends up going back up. So anybody that would have bought right here actually did end up making money, but maybe they sold right here. So, it's an interesting pattern there. But we did recently go down pretty bad, mostly from Robinhood earnings. But it seems like we're having a little bounce here, at least today anyways. But year over year, still up 48, 49%. And of course, of all time is about 340%. We got a lot of top movers today, like Sprouts Farmers Market. So this quote unquote boring grocery stock is actually up over 13% today. Reddit is up almost 13% today with a good response to earnings, a good reaction from the market. And of course, Google up over 11.5% today. Man, I wish I would have just full ported Google or something. It probably would have saved my account. Lemonade, of course, I still have that option contract. Unfortunately, Lemonade did actually have an initial good earnings response. It was up huge. It hit, over $70 a share, I think, but then it immediately came right back down, just like the rest of fintech. It just can't catch a break. The other fintechs, they didn't really, I don't think they had a good reaction. Maybe they did, but it was like super brief. But at least Lemonade, it had that good pump early on. And it seemed like it was going to be a good day. But then, unfortunately, the entire fintech sector, it seemed like, just started selling off. Robinhood, SoFi, etc. And of course, Lemonade is just going to follow. It seems like Ethereum or crypto in general is just having a little dead cat bounce, just chopping around. This is a nice looking downward trend, unfortunately. Man. So definitely I should have put a lot more into Reddit and Google. But it is what it is. My intentions with Reddit were to only like trade small amounts of it in and out and dump it in my second account anyways. So it is what it is. But at least Google, I really wish I would have put more money into that one because that's like a good, solid long-term hold for me. I really believe in Waymo. I actually recently used Waymo. Well, I shouldn't say recently. It was a little bit ago. I did try out Waymo and it was definitely competition for Uber and Lyft. It is, slightly cheaper and it takes about the same time, right? The quality of the ride, it's not that much different. Obviously There's a lot of good Uber drivers, Lyft drivers, but Waymo, it's a robot, right? It's just an autonomous car. It's going to drive quote unquote perfectly. So there wasn't really too much of a difference. The only thing that I did notice was a cheaper price. So definitely Google, I think, will be a big winner in the autonomous, taxi service type of business. And obviously they have YouTube, and I love YouTube. So I should have played Google, but it is what it is. As for my top 10 holdings, nothing much has changed a whole lot. I did bump up my lemonade position, unfortunately, before earnings just a little bit. Hasn't really gone anywhere. Sprouts, big winner for me. It actually was, I want to say, almost at 85 today, but it looks like it's just going to level off at above 80. Still, it's a great day. I'm up a little bit on my Sprouts. This is a stock that I've been doing the wheel strategy on somewhat. I haven't been selling any cover calls because it did come off of its highs, recent highs, just a little bit here. So I think I did sell a cover call back here. Well, let me look at year to date. And then I took profits, of course, or it expired worthless. And now that it's going for round two, it seems like, I'll possibly sell some more cover calls once it hits like the 100 area. It fills this big gap right here. So, Sprouts is one that I am looking forward to when it comes to filling a gap. Robinhood, unfortunately, back down to 73, 74. I had a good day today, but, coming off of earnings, it did have a negative reaction, which is all right with me because I actually am considering buying some more Robinhood. And speaking of Robinhood, there was a very interesting post that I would like to go over. And even though you could interpret it as bad news for Robinhood, if Robinhood, does get into, let's just say that Robinhood gets a little bit more competitive in that space, definitely I think it would be beneficial. And even though their earnings wasn't really super impressive, and the market obviously didn't have a good reaction to it, I'm still long-term bullish on Robinhood. I think Robinhood is that type of company where it has periods where it doesn't really seem too exciting, and people are kind of disappointed with Robinhood just because the highs for Robinhood are so high. They were the pioneers of commission-free trading, right? Everybody's loving Robinhood. Retail loves Robinhood. They're just a darling, right? And then they have that GME, AMC, whatever it is. They have that big negative PR cycle, and that was also somewhat around the time of the 2022 bear market. So, of course, during that bear market, they're going to get sold off heavy, and then we go through this time period of lots of negativity for Robinhood, and then the sentiment starts shifting. The more and more new features come out. Robinhood is very early to a lot of things like tokenization. Even though Robinhood is not always literally first, sometimes they are first, but sometimes, most of the time, they're not the literal first ones to do something. The crypto industry obviously has had a lot of tokenization type of things going on, but I think Robinhood will be the company that actually popularizes it. Very similar to Apple, by the way. Apple is definitely not the company that does something first. They just have that perception of doing something first because they'll take a good idea or something that is new and bring it to the masses, which is what Robinhood does very well. So I think this is just a very negative time period for crypto and fintech and software stocks, growth stocks, anything that's not energy and quote unquote safety stocks. But at the end of the day, if crypto flips back around, I think that will be very beneficial to Robinhood and even SoFi, because right now SoFi is just beginning to roll out their crypto during this bear market, which is very smart because Robinhood was, Robinhood benefited from that big hype cycle and bull market. But now that we're going through this bear market, this winter in crypto, their numbers are not looking too good when it comes to crypto, right? But SoFi is actually pretty smart right now because they waited for that winter bear market to happen, but before they started rolling out those features. And as they're rolling out those features now, obviously it's going to look like they're a super growth stock because it's a brand new feature, right? It's not like a brand new feature or a brand new product is going to be negative because there's nothing in the previous year to compare it to, right? It's a brand new space. There's going to be growth, obviously. So I think, SoFi had something crazy like triple digit growth in crypto, which makes sense because they just now started rolling out crypto. It doesn't mean that, SoFi is just going to dominate crypto entirely. It's just that SoFi was very strategic about how they rolled out crypto. But at the end of the day, if crypto starts flipping around, going to all-time highs, SoFi's numbers are going to look even better. And then, of course, that's going to help Robinhood, the stock's sentiment. And as crypto is doing better, they're going to roll out even more features. The excitement is going to come back again. And I expect, Robinhood stock to start gunning for $200 a share. It's my own personal price target. Obviously, it's not financial advice. And as for my recent transactions, of course, before we get into some more Robinhood X posts, we got my Lemonade buy that I made before earnings, of course. And I want to see where Lemonade, so Lemonade's at 57 right now. So unfortunately, that buy did not work out for me, but it is what it is. I still think, my own personal price target for Lemonade is 100. So, anything under like 80, I would say for me is a good risk reward for me, right? It doesn't mean it's going to work out for you, but I got my REIT dividend. I still have my American Express dividend on the way, and my REPX dividend, my very fat one that I'm looking forward to. So the first thing I wanted to get into is actually kind of a funny post, not really, from Jim Cramer saying Hood can't change the crypto perception just yet, and now doing predictions market, gunslingers all over the place there. So, I would somewhat reasonably say that this is kind of a bearish negative sentiment type of post, right? And some would say that Kramer is an inverse indicator. So I'm just putting that out there, all right? Don't shoot the messenger. But we also had this post from Serenity, once again, a very good X account that I like to read up on. They also have a subscription on their X account. I think it's only $1, which is surprising because, I think this X account posts a lot of very high quality content, but enough glazing, Serenity. I'm just going to read off what they think. Product innovation from Hood would have been enabling international stock trading ASAP. Instead, they doubled down on prediction markets plus raffles plus new crap coin listings where retail recklessly lose their money. They also lost retail to IBKR, which is international brokers that now enabled Korean stock trading, especially due to international stock growth from Taiwan, Korea, Europe, Japan. As a result, we saw new IBKR accounts grow to an all-time high this quarter just from qualitative experiences. My opinion is Hood missed earnings since they lost track of what they should actually do to help out retail investors. If they had retail investors all spending tons of transaction fees from international equities trading, likely more margin usage, fees, cash on platform, wealth appreciation, and so on, which is the basis of the platform, maybe things would have gone better despite the digital asset downturn. So I thought this was a very good take from Serenity. That negative perception that Robinhood has right now, that negative reaction to earnings, I think a lot of that could have been avoided if they did have international stock trading. And I'm honestly surprised that Robinhood hasn't already done this, where I think there are other companies like Wise, I believe. I've never personally used Wise before, but I think they're like a multi-currency digital wallet or something like that. I think Robinhood should already have had something like that. International stock trading. Robinhood, as of right now, they don't even have Ferrari stock on their platform, right? And SoFi, even SoFi has RACE stock on their platform, which is Ferrari, right? And I'm personally surprised by it because I remember when I first downloaded Robinhood a long time ago, and I was looking at Ferrari stock. It says this stock is not available on this platform, something like that. And today in 2026, it still says that for Ferrari stock. And I'm only using them as an example because that's just what I personally remember from when I first downloaded the app. But, just like Serenity mentions, a lot of Asian stocks, a lot of foreign stocks, like, especially Latin America, have been doing very well. I think pushing that international market more would have not only helped American investors, but also obviously international customers that Robinhood is trying to get to. And also on the side, they can work on that multi-currency wallet mission that they have, or a side mission, whatever it is, which also, by the way, might help them out with their whole Robinhood Gold and Platinum card thing that they got going on, where they're trying to get a lot more travelers, right? High spenders to come to the platform. But travelers specifically, right? Because they're trying to compete with that Amex type of customer where they're going to lounges. So pushing for multi-currency wallets, international stocks, incentivizing that kind of activity might have helped them out with earnings. So it's a very good take here from Serenity. But we have this post here from fiscal.ai for Robinhood's Q1 results. We have total net revenues up 15%, EPS up 3%. Now, this is a hot take. This is a very controversial take. I just want to give a full disclaimer for it. But I personally do not care about EPS. I care about revenue growth and free cash flow per share. That is what I care about. So EPS only being up 3% might scare a lot of, like, I don't know, newbie investors, whatever, or maybe somebody that bought Robinhood at the top, and now that they see Robinhood, at $75 a share, and they see EPS is only up 3%, they might be angry about it. But as somebody that has been doing this for a little while, I honestly don't really care about EPS. Like I said, that's a hot take. I'm not a financial guru. I'm not your advisor, but that is just my opinion. And that's how I go about doing things. But anyways, funded customers are up 6%. Total platform assets are still up 39%, which is, it is disappointing that it's down more recently, like quarter over quarter. But still, total platform assets being up 39% for like this retail app where, we're quote unquote gamblers. We're gambling away everything on prediction markets and all of these like crap stocks. That's just what the market perception is, right? And also very crypto heavy type of customer, and crypto is down a lot right now. So total platform assets being up 39% in that environment, I actually think is a good thing. Net deposits up 22%, gold subscribers up 36%, very good. So these are sticky customers, right? People are trusting Robinhood with their money. They're depositing money into the platform and with Robinhood banking, and they're getting subscribers that are more sticky, right? People are paying that $5 a month for Robinhood Gold, and they're sticking around. Now, I also wanted to quickly go over like Lemonade's earnings reaction, and also SoFi's just very quickly. I know this video has been a little bit too long, and I appreciate anybody that has stuck around. Listening to me talk for 30 plus minutes is very impressive. But we have Mr. Shai here. I believe he was a co-founder in Lemonade, but according to his post, top line was up 32%. Seems like revenue grows 71%. Gross profit increased 159%. Customers 3.14 million, adjusted free cash flow 17 million. So I'm going to double check on that to see if they actually have free cash flow per share now. But it seems like they're free cash flow positive now, which is a good thing for Lemonade, especially in this environment where it's a little bit tougher for fintech and a lot of growth stocks. And also we might be entering a period of like a liquidity squeeze, right? Where we're kind of coming down after going through a big hype cycle, big bullish cycle. But it seems like Lemonade Pet is doing very well. It surpassed 500 million top line in early Q2. It is the #1 most searched pet insurance brand in the US. Very impressive. Lemonade is also the 4th largest pet carrier in the US now, and its AI-powered automation drives record claim handling efficiency. The efficiency and growth is helping them with profitability and also having competitive prices. Car insurance is up 60% year over year. Loss ratio improved to 74%. And I'm going to be honest with you guys, I don't know what loss ratio means, but if it's good, then it's good. And now we finally have SoFi's Q1 results from fiscal.ai, another good X account, I would say. But financials revenue is up 43%, which is a B. Adjusted EPS is up 100%. Now, that does look very impressive. But like I said, I don't really care about EPS. EPS, in my opinion, is heavily manipulated. Not everything can be manipulated. Obviously, there's nothing that you can't somewhat manipulate. But EPS, I personally just don't like it. But lending revenue is up 55%. Tech platform is actually down 27%. So that's kind of in line with what we're seeing in the markets, right? Crypto is down, software is down, fintech is down. So SoFi's tech platform is actually slowing negative 27%. Financial services revenue is up 41%. Total members is up 35%. Origination volume is 68%. So getting a lot more sticky customers, it seems like, for SoFi. And I personally have subscribed to that $10 a month. I did originally have that direct deposit just to get it for free, but I went ahead and just got the paid anyway. And briefly, I do think it messed up with my cashback benefits. So I'm gonna have to double check with them on that. But very good for SoFi, but of course that negative earnings reaction. But just look at this chart of total members. It's just a clean uptrend for total members. Now, as for comments on my previous video, we've got Pure Life here saying, dang, thank you for your contribution to my channel. We got Tax to Poor here saying, love you, kind of sus, but love you too, I guess. And we have King Timmy making his return. Let's see what King Timmy has to say. I sold Hood. I can't take it anymore. Declining revenue. I don't think Hood has declining revenue. Some minimized user growth, but revenue per user down nearly 20%. I think it was up 8% according to Fiscal AI's post, but I'm not sure. Crypto revenue is down. That is true. There's no growth. That P is very high for zero growth. They have no moat. Overall, took a net loss of 27K on Hood all time. I could have sworn you made some posts in the past saying that you were making a lot of money on Hood, but it is what it is, I guess. It's going lower. Wish you the best. I'm in NBIS and AAOI. So I honestly don't really know a whole lot about NBIS and AAOI, but you see, this is exactly what the sentiment is around fintech right now. It's not the hot, exciting thing anymore. And even with my X posts, anytime I post something crypto related, it gets almost zero impressions anymore. Everything is about what the new hot stock is. So I think sometime in the future, I don't know when, but that sentiment's going to flip. People are going to be happy with crypto again. They're going to be happy with fintech, software stocks, fintech stocks, growth stocks, and I will probably be back over 300K. Now, I really hope that time comes sooner rather than later, because it has definitely been painful. These, like I said, this is the worst time period. I absolutely hate this time period where the market is at all-time highs. My account is not. My number one stock pick is just not doing well at all. It just had earnings. It crashed on earnings. And it's just a very volatile chop back and forth for my entire portfolio. But, like I said, just got to get through this time period.